And am I audible now? Namaskara, Eldrigo. Namaskara to everyone. The topic that we are going to speak is about integration of IT specialists in audit. So, I know in the last 15 minutes I'm not going to have anyone listening to me because they're going to be listening to their stomachs. So let me try and condense whatever I have in the time that I have been given. How relevant is IT in today's scenario? Any questions? People are silent, so I take it that IT is not relevant. How relevant is IT for chartered accountants? Is IT relevant for chartered accountants as far as we are concerned? Is there an opportunity? Is there a risk? Is there something which we should be concentrating on, which will bring us more coverage as far as the risks are concerned, more coverage as far as adding value to the client is concerned, right? The major paradigm shift which has happened today, slowly and but surely, is earlier we used to say information technology is an enabler of business, right? But in today's scenario, I have been in this profession for the last 16 years doing only technology. So what I have seen is it's become more of a driver of business. Okay, it drives the business more than it enables the business. So today, whenever a company wants to come and do business, the first thing it's going to look at is how do I bring an app, right? Banks are looking at it. Each and every person is looking at bringing an app into the system. As a part of bringing that app, quite a few things roll into the financials, roll into the way of doing business by way of information technology. The interesting thing is, and the complexity is, that to do the same function, there are a lot of host of options available, right? You have a Zepto, you have Blinkit, you have lot of options available as far as doing business. For doing the same function, there are a lot of people who are providing the same technology which is being used in a different manner. One more thing which has come in and added to the complexity as well as the opportunity is RPA as well as AI. What is RPA and what is AI? Anyone? How many people file income tax returns using some third-party software? Right? Without knowing this, we are using robotic process automation, right? You just put in the password once for the customer, it goes and files everything, opens the portal, files everything, uploads and says whether that's called robotic process automation. So without us knowing, that has come into the regulators' kitty also. I'll just take a little bit of how the regulator are using it. One more thing is about audit trails. Now, because institute mandates us to report on audit trails, whether we want it or whether we don't want it, we need to have a little understanding of technology, right? Interesting thing again is, there are various levels of automation. One company might have completely automated. I've seen companies where there is absolutely no manual intervention. Cradle to grave, everything is done by the systems. Everything is done by the systems. If we find something which is done manual, it is a red flag. And finally, how do you analyze SA 240 frauds, which basically are facilitated by the systems and are not being able to understand systems? Now, why has there been an emphasis on technology? Why have regulators started looking at, why have companies started looking at technology as a driver of business? Everywhere I go, people say seamless customer journey, because you might have seen even banks or any other company, they say download the app, download the app, download the app, right? So there is one interface which asks the customer or the potential customer to download an app which provides an interface to bring in more business for the company and to create a very, very easy journey for the customer. So companies are attempting to create a seamless customer journey wherein click a few buttons and the transaction is done, right? What does this bring into the picture? There has to be a lot more controls as far as systems are concerned. If a price is a master price, the HSN has to be taken care of, the quantities have to be taken care of. If you select 2 and there is an offer, that also has to be integrated into the system. All of this has to be brought in as a part of the seamless customer journey. Then you have offers which come in. As auditors, how are we going to audit this? Right? I'll give you a practical example. A retail company, a very big retail company, has distributor schemes as well as customer schemes. Okay? Quantity, if you buy this quantity, you are going to get it at this price. But there is one more caveat there. The system is configured to say that whatever price is given to the distributor cannot be below cost. Okay, makes sense, right? Cost, I cannot cut cost and give a discount wherein I am bearing the expense. But in quite a few cases, it has happened that the system has not looked at cost and sales have happened below cost. Is this a value add we can give management? Through our audits itself, this is a value add we can give management, right? Will it increase our standing as a part of being in a position to do an audit and looking at something which will add actual revenue money, which will add value to the client as far as understanding that what they wanted to happen is not happening, is getting a little off because their system is not configured, because management, you cannot understand, you cannot expect management to know everything about systems. The key part here is regulators are also looking at automation and its effectiveness. Earlier auditors were in a position to do manual procedures, right? Because so much automation has come in, regulators, whether it be RBI, whether it be SEBI, whether it be IRDA, almost all regulators are asking for automation. If you have automation, what are the automated controls that you have put in place? Depending on the automation, regulators are looking at this particular thing. Quick is the buzzword. If you've seen quick commerce, right? Q has become the buzzword. Everyone is looking at information security. DPDP Act, whether the rules have been notified or not, MeitY has already said, act as if we have notified the rules. That again, DPDP is again an opportunity for us. One big thing which is being looked at again by all regulators, whether it is shareholders, whether it's companies, whether it is within India or outside of India, is transparency of financial processing, right? Initiation of the transaction, processing of the transaction, recording of the transaction, and reporting of the transaction. So these 4 legs are being looked at because almost all of this happens through technology. Now, use of AI. Can anybody tell me, because I do a lot of reviews of softwares, everybody says AI integrated. Okay, that is the catchphrase for AI, for selling their product. Anybody has any example of where AI is used as a part of a financial application or any application which is provided by a software vendor? Okay. You have these agreements, right? Contracts, agreements for, let's say, NBFCs. Let's take NBFCs or let's take banks. Banks are supposed to present the loan agreements in vernacular language. Is that right? So everybody cannot be expected to understand English. So what banks or NBFCs do, they translate the standard agreement into the vernacular language. Remember, as a part of the Google Translate or any other thing is a specific AI, okay? It understands the diction and it translates. The challenge here is it's 85% accurate. In some cases, it's 55% accurate. Okay, I have seen cases where 15 has become 25. English 15, in a vernacular language, it goes into 25. Okay. Regulators are looking at ability to make changes, bypassing control measures through IT. Now, why do you need to integrate? Why do you need IT specialists? Any essay which speaks about IT specialists? Any essay which speaks about IT specialists? Absolutely not. The inference that we draw is from essay 315. Essay 315 is the master essay. Okay, it has got 230, it's got 250, it's got 240, it's got 330, it has got reference to almost all the essays. So 315 says understand the potential for misstatements through understanding of entity and its environment. What do you mean by environment? The environment in which it operates, the business, the industry, what are they using, what is the management, the entire gamut of how business is done, how financials are recorded, how financials are reported. And finally, in brief, cyber security concerns. Any questions? Okay, I'll give you some examples. Okay. A company, the sales department books sales through sales orders, which is running through the systems. Okay. Sales orders have a configuration of if this customer, this is the price. If this customer, this is the price. Okay. And when the sales order is created, the masters are automatically populated. But there is a catch. Because of the configurations, once the sales orders are populated with the price of the material, it can be overridden. Okay? As auditors, does it make sense for us to understand how many of the sales orders have been overridden? What is the impact? Is it a fraud? Could it be a fraud, potential fraud which is happening? Would management want to know? Would we want to know whether something of this sort is happening? We would, right? Again, if a purchase order has been approved in the system, you don't expect it to be modifiable, right? But what happens if a purchase order is modifiable post approval but doesn't go for reapproval? Would you want to look at these kind of purchase orders a little differently? Certain transactions which are there, certain functionalities which are there in the system, you have fantastic controls. But there are certain functionalities which are there in the system which allows you to bypass all of these controls which have been put in place. Would we as auditors want to look at this a little differently? Obviously yes, because as far as, which is the essay for audit documentation? Is it 230? You can Google. That again is use of technology. So I tell my team members, what I do is I Google. Before I speak to you, I Google and I get some background on what we are going to speak and then I speak. So it says audit documentation, right? So we would want to put enough documentation in our files to say, I have looked at these particular things as a part of doing my audit. I have looked at technology, I have looked at what deficiencies are there in the system, right? With that in view, there is a checklist on essays. It says acceptance and continuation of client relationships and of audit engagements. It says team's technical expertise, including expertise with relevant information technology and specified areas of accounting or auditing. So, specific call out by the institute as far as the checklist is concerned, which says that technical understanding. Do you think if we are able to demonstrate the competence as far, even a little bit of competence as far as IT systems or systems are concerned, would it attract more business for us? Would people who we are working with, whether in India or outside of India, have more relevance or try to outsource more work to us? If we are in a position to say, oh, we are in a position to comment on IT systems also, technology also. As a part of the checklist, the entity's internal control, the procedures within both information technology and manual systems. The complexity here is quite a few things. The identification that we need to do as auditors is how much of the audit that we are doing is driven by technology, how much of it is manually driven, which is probably the biggest risk we have as auditors. It's in the essays also, it's in essay 315 also. Which is the biggest risk we have as auditors? Because what is our first touch point to doing an audit? What is our first touch point? That is, to express an opinion is the final one. What is our first touch point when we do an audit, when we go to do an audit? What is the first thing that we ask for? Understanding the entity is, what is the first thing we ask for from the client? Do you look at trial balance? Do you generate reports? When you do an audit, are you relying on reports from the system? Right? Do we check whether the reports are right or not? Because we are relying on reports, right? Our entire audit is based on what comes out from the system, and we are relying on reports which are coming out of the system. Are we covering ourselves enough by trying to understand whether the reports that actually are the basis for our signing off on the opinion are correct or not? Simple, it's not very complex to do, but are we doing it enough? Basis, SA 315, 240, 230, audit documentation. Here there is no sampling as such, okay? The benefit of IT is it's global. It's already global. There's no specific standard. Each regulator in India will have a standard, each regulator in the US will have a standard. You just to fine tune your procedures to meet that particular regulation or to meet the requirements of that particular regulator. What are the fraud risk factors in IT? Lot of risk factors, right? High vulnerability to rapid changes. Based on my understanding and whatever I have done, regulators have started now looking at how many changes to the application are happening on a regular basis. Is your application stable? Are you putting an application, because it's agile, right? It's quick. I need to be in the market now. Are you putting enough controls in place in the application to see that processing happens properly? There is transparency as far as processing is concerned. So high vulnerability, fraud risk factors, high vulnerability to rapid changes such as changes in technology, product obsolescence or interest rates. High turnover rates. People in technology they don't stay at one place, right? They write the code, they move out. Somebody else comes in, tries to work on the code that is already written. Lot of things could go wrong out here. Inadequate management understanding, very, very important. Management doesn't understand They just want information technology. They want seamless processing. They want to be seen as doing everything in an automated manner with very little manual intervention. Management may not be understanding the impact of information technology or bringing additional applications by way of trying to smoothen the journey for the customer. Inadequate access controls. Anybody has any view on inadequate access controls over automated records, including controls over and review of computer system event logs? Anywhere where a regulator has actually penalized a company for having lax access controls? Kotak Mahindra Bank, right? RBI put a heavy penalty because their access control was not good. What was the access control? The people who had to enter the server rooms were not monitored. Obviously, this is high risk. I don't want to comment on whether it is fair or not fair, but again, this is what regulators are looking at. Okay? What do you mean by computer system event logs? What do you mean by computer event system logs? Anyone? I was not expecting any interaction, but that's actually right. What do you mean by, because it says audit trails, right? We have to report on audit trails. So what do you mean by, what is different between audit trails and system events? Could you just speak up, please? Yes. Who has logged in? How much time have they logged in? What have they done? Again, this is in public domain, so I can speak about this. Goldman Sachs had a huge fraud, and they were able to identify who had done it because the manager had gone to a subordinate system and actually logged in and approved it through his system. So it was possible to identify that this has been done not through his system, it has been done through his subordinate system. He was supposed to enter, this person was supposed to approve. He changed before approving. Okay? So some things which we should be looking at, whether there is AI which is enabled, whether there is RPA. What do you mean by an RPA? What is the difference between an RPA and an AI? I will very briefly touch upon this, because I don't want to make this too technical. Niranjan said this is technical, I don't want to make it technical. What is the difference between RPA and AI? Anyone? Some companies have put auto reconciliation of accounts receivables and auto reconciliation of accounts payables, right? So there is a bot which actually pulls data from different systems, collates it, does a automation of the reconciliation. Whatever doesn't match is thrown out as a discrepancy. This is an RPA, this is not an AI. This is basically something which is written as a part of the code, and it stays, it doesn't take a decision, it doesn't suggest something, it does what it is configured to do. But there is something which is called an orchestrator or a manager, which actually says, okay, pull data from this, see whether data is complete, pull data from this system, see whether it is complete. Now that you have all the 4 data, pull it. If you are not in a position to get data from this one, say that wait for that data to come. How are we as auditors comfortable? Because we were comfortable when people did it. Are we comfortable, or do we have the capability to understand whether the system is, because it's a code. Now a code is doing what people used to do. Now a code will stick to what it has done, what it is designed to do. When I go for a first quarter audit, do I know whether the code has been changed or the code has not been changed? Because I am comfortable in the first quarter saying that the reconciliation is good, but somebody has gone and changed the code in quarter 2, am I comfortable seeing that the reconciliation is done in the right manner or not? Direct changes to authorized information recorded after processing through authorized channels. I have tried to make this a little complex so that I feel important. What does this mean? Anyone? Very rarely looked at, but extremely high impact. To put it in 3 words, direct database changes. Everything has come and through the application has been processed, but in the database somebody has gone and changed one figure. Remember, whatever is reported is from the database, right? So if everything has gone through but somebody has gone ahead and changed a 10,000 to a 10 lakhs, the report will show 10 lakhs. Are we looking at that particular thing to find out how many direct DB changes have happened which could affect our audit? Again, 230, 240, consideration of laws and regulations, right, which is 250. That was my cue for you, me losing you. Okay? Consideration of laws and regulations. Are we relying on reports from the system for GST returns, for TDS returns, all of this? What is management relying on from systems? They have every article which is mapped to a HSN code. HSN code is mapped to a rate, right? Then you have a rate which is mapped to within, outside. So it will actually calculate article, HSN code, rate, whether it is IGST or CGST and SGST, right? All of this is so 250, everything is configured through the systems. How much manual are we doing? Or is it more efficient to do it by trying to understand whether anybody has changed the HSN rates? Another important thing that I want to look at is inventory valuation. Do we rely on inventory valuation from the system? Or do we do it outside of the system? In most cases, inventory valuation happens within the system, right? If some material has a standard value, standard price, and then a weighted average, has somebody changed a standard to a weighted average and then changed it back to standard? One interesting case where the inventory valuation, the material valuation was overridden just before year end. Okay, because the software allowed that to happen. The inventory valuation was changed. Let's say from 1 rupee 50 paisa it was changed to 2 rupees 50 paisa. Is it going to affect our financials? Right? A lot of things get affected. And then post, within 7 days, the 1 rupee 50, the 2 rupees 50 paisa was changed back to 1 rupee 65 paisa. I'm just saying one material. There were 3,500, more than 3,500 materials which were done in this manner. Do we need to report? Yes? Okay. One more brilliant thing that has happened, I don't know whether it's brilliant or whatever, you have huge applications which are called monolithic applications which have now been broken down into small applications which are called microservices. This is done so that different teams can manage different competencies. For example, accounts receivable will have one microservice, it will not be combined. Because those people are, you can look at that as a specific service. Any change which happens in a accounts receivable or an accounts payable does not affect any other thing. So you can look at this as a single application, and this will in turn speak to all the other microservices. You have a sales microservice, you could have a purchases microservice. So you have different microservices which are actually broken down. So a single huge application is now broken down into small applications. Now where is the complication here? And where is the challenge? Or in my case, where is the more interesting thing out here? One is sequence, the other is interface. That is, one application being in a position to speak to another application, provide the right and correct information for the next microservice to process the information. Finally, it comes in the financial statements, and then we start auditing. Now, we have to probably look at different microservices in a different manner, but that is how the IT infra is changing. Because to change a huge application makes very little sense nowadays, because a small change also could affect a lot of other controls, could affect a lot of other processing, which is why they have broken it up into smaller spheres. Netflix uses microservice, okay, because they are now in a position to provide seamless services. You can Google who uses microservice. Lot of companies use microservices. Even our companies in India, outside of India, use a lot of microservices. Now, audit trails is one more example where we need to have a little understanding of technology, because we are signing off on audit trails being available, being stored in a right manner, and there is no tampering of audit trails. And these audit trails need to be preserved for, is it 8 years? So we are actually, in the second year, we are going to certify whether first year and second year have been modified or not been modified. In third year, we are going to certify first and second years together. So over 8 years, we are going to see whether audit trails have been modified, or there is a possibility of audit trails being modified or not. Now, for audit trails, there is a specific mention in the guidance note which says that you can rely on SOC 2 Type 2 report. What is the SOC 2 Type 2 report? It's a service organization controls wherein a business which is done by Amazon, for example, AWS. Everybody is hosted on AWS, right? Quite a few people are hosted on AWS. So as a part of AWS, I cannot go and audit AWS, but I get a SOC 2 Type 2 report to understand where are the controls as far as AWS providing its infra, providing its services are concerned. So we need to be aware how to read a SOC 2 Type 2 report. We also need to be aware how to read a SOC 1 Type 2 report, which is for our audit reporting. We already spoke about reports, right? As far as technology is concerned, one more challenge is, in the current scenario, you could have migration in between the year, migration not only of financial applications, but migration of platforms. What do we mean by migration of platforms? From a Windows platform, the company could be moving to a Linux platform because of cost considerations. Remember the way, if an app is given in Android, does it work in the similar manner it works in an Apple cloud? It cannot, because a different app has to be created for Android, and a different app has to be created for Apple. So all of these considerations has to come into play. Also, because microservices has come into the picture, if any additional microservice or any additional application has come in, understanding how the business has changed or how the processing has changed. ISA 315 again, Indian Standards on Accounting. How interfaces are combined. Is there an impact on my audit or the client? So that brings, I have not put an end slide, that brings us to the end of my session. I have tried to make it as simple as possible. Okay. How are we geared up to do an audit of, even a small audit of a telecommunications company? How much of information processing happens through systems in a telecommunications company? Or let me put it differently, what kind of manual intervention are you expecting in a telecommunications company? Okay, let me take one more example, bounce. Or tomorrow we might have driverless cars, right? So if you have driverless cars and we get an audit of a small component of a driverless cars, how are we going to get comfort on revenue? Okay, then you have inventory or fixed assets. How are we going to identify how many cars are there, how many, because there is going to be a line item in the financials, right? We have 5,000 bikes or we have 5,000 cars. How are we going to see whether those 5,000 are available? More importantly, whether they are installed and commissioned, they are working. Because I can recognize revenue only when it's working, it's installed, it's in operation. They will say maintenance, repairs and maintenance. How are we going to validate whether that particular thing has obsolescence? How are we going to look at obsolescence of these particular things? Do you believe there is going back? Are we going to go back from this digital age to where we started off 20, 30 years back? Or are we going to get more digitalized? There's going to be more digitization, there's going to be more automation, there's going to be more complexity. We'll take this up in the next session, but remember there are a lot of opportunities. Even if a small component of this huge area is taken up by us. Remember, by the time we complete this, technology at some of the clients might have changed already. They are thinking of bringing in one more. By the time we are done with this day's session, one client somewhere either in India has decided, oh, I need to change or I need to bring this aspect of the automation for my client, and that is where the revenue streams are going to come from. That is where the expense streams are going to come from. Okay, I'll end with a final example. Any example of AI being used which can have a relevance on our audits? Anybody, anywhere? I would love to hear somebody say, I have seen this being used and this is where my fear is. Anyone? Sorry, come again, sir. That's fantastic. That's basically underwriting, right? So underwriting, in a scenario where you have underwriting which says follow these rules, if these rules are not followed, try and understand whether there is a co-lender. You could have your own underwriting rules or you could have a co-lender's underwriting rules. So based on whatever underwriting rules the system passes, and then it says, okay, suggest this particular thing. One very interesting area where AI is used. In any company, is attendance important? Is attendance of the employees important? In what aspect? I don't know. Which line items does this impact? Anyone? I should be getting a lot more answers. Where does attendance of the employee impact the financial line item statements? Sorry? Employee cost? Anything else? Revenue? Revenue, okay, we can debate. Anything else? Sorry? Traveling and conveyance, yes. Anything else? Sorry? Employee compensation, okay. Provisions, gratuity, okay. Anything else? Anything else? Actual revenue loss. The employee is not coming, but I am still paying salaries. Is that a possibility? Right? How is AI come into the picture now? Sorry, come again? Biometric, no, it's gone past biometric. Biometric is slowly being, you have to come to one place and then swipe, right? Face recognition, okay. How does face recognition, how is face recognition in the first place an AI? Yes, obviously, because today I might come with a cap, tomorrow I might have a cut out here, right? I don't want to get into the women's part, but again, today I might have a contact lens, tomorrow I might have a spectacle. Does it need to identify that I am me, and it needs to mark an attendance for me, right? What happens if two people look very similar? But this is what is happening as a part of a seamless customer journey. People have now started putting in place face recognition. The moment a person walks in, there is no biometric, there is no swiping, nothing. He has entered through a valid gate. He is a worker, or he enters the corporate office, or he is in supervisory, or he is in the warehouse. He enters, cameras have been placed at specific locations which actually record that this person has come in, and it marks attendance for him. Okay, what if it doesn't mark attendance for him? Because he could be working at some other place, at an off-site location, or where there is no okay, fantastic point. Now, if you go, if I have been to Chennai, in Chennai, the problem I used to face was, there is an app, right, UTI app. So in UTI app, I can't book the ticket if I am within Chennai station, because there is a geofence there. I should be outside the geofence if I have to book a ticket, because what happens is, if the TC comes and I start booking the ticket when I am within the station, I can bypass the control. So what they have done is, outside the geofence I can book the ticket, inside the geofence I cannot. Another same application of a geofencing. If I have to mark my attendance, I have an app. I have to be within the geofence. I have to be 50 meters within the office to be able to mark my attendance. Outside of 50 meters, I cannot mark my attendance, because the ability of that app to allow me to activate that button to mark my attendance is not available. Within 50 meters, it allows me to mark my attendance. All of these are things which we need to understand as a part of artificial intelligence. More and more and more and more and more systems are coming into play by way of making the journey seamless, by trying to make more efficiency, by trying to bring more productivity in companies. We need to be geared up. My suggestion would be, try to read up as much as is possible as far as information technology is concerned, because you will be amazed at how much the IT team will be in a position to speak to you if you speak their language. If we are not able to speak their language, they are not in a position to speak our language, right? We need a certification to be a chartered accountant. We are the people signing off. Request, please enter the field in small steps, because by the time you start walking, technology would have changed. But this is a continuous war which we are having as far as trying to understand how systems are changing the way we are working as far as audit is concerned. Any questions before I just go to the most interesting slide? I can give you a lot of examples, but loyalty points, right? Wherever you had loyalty points. How are we comfortable that our loyalty points are what are accurate? Do we do a reperformance? I buy this, I go there, I redeem my points, I spend my credit card. Do we do a reperformance? This amount I spent, so I should be getting 5 points. We are relying on the system, right? Similarly, auditors are relying on the system. Thank you. Thanks for a patient hearing, not making it too complex for me by answering questions, but we'll still have a chance to do that in the panel discussion. Thanks a lot.